You don't want to screw this call up. I mean, your progeny are going to hate you if you knew about this and you didn't buy it. I mean, they're just going to absolutely hate you, and they're going to think you're a legend if you sacrificed and didn't buy that expensive car and bought a whole coin instead, because that whole coin is going to be worth 10 million bucks. Not that far out, by the way. I don't think anybody's missed the boat. I mean, I think we're still very much in the early days, and it's going to 10x, and that's going to 10x again. So from an investing point of view, you don't want to miss something that's going to go up 100x and maybe 1,000x if you talk 15, 20 years out. And point one is going to be a meaningful amount to have. I mean, it's being a whole coiner is going to be an enormous deal in a few years. And so I don't think you missed the boat. It can come out of the blue. I mean, we all know how this thing happens. I mean, the thing that's so wild about this asset is the way that it can really move and move fast. And that's why I say, like the hedge funds that are short this stuff, they're about to have a deeply religious experience. I mean, they don't understand. They don't understand this can go up 50, 100, 150% in months. You're going to see those shorts are going to get covered so goddamn fast. I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K. I'm pretty angry about how I've seen my country go downhill. I mean, America was a great place post World War II. I mean, it really was. When I compare the America of my youth to the America of today, I'm just heartbroken. I mean, it's sad, what's happened. And frankly, I think fiat money is the cause of that.
Today's interview is with investment manager and renowned Bitcoiner, Larry Lepard. Larry has an MBA from Harvard University, and he has decades of investing experience under his belt. And he has a seriously impressive track record. Larry foresaw the boom of the internet, being an extremely early investor in 1993 and 1994 when the internet was just in its infancy. However, his investing journey eventually led him to sound money, silver, gold, and eventually what he thinks is one of the biggest opportunities of our lifetime, Bitcoin. Larry, just like he foresaw the rise of the internet, was an early investor in Bitcoin, first buying when it was just $300 per coin. In this interview, we go over his thoughts on Bitcoin today, the parallels Bitcoin has to the early stages of the internet, and finally why he thinks Bitcoin is eventually going to $10 million per coin. Make sure to stick around to the end of the video where Larry drops some words of wisdom on how to succeed as an investor. If you enjoy what Larry has to say, be sure to check out his Twitter and website, the first links in the description. Also guys, I hate to do it, but if you've ever enjoyed any of the videos we've posted or you enjoy the channel, if you could do me a quick 1-second favor and hit the subscribe button, it helps out the channel more than you know. The bigger the channel gets, the bigger the guests we can have on to get better and better content for you. Right now, less than 5% of our viewers are subscribed to the channel. If we could bump that up to 20%, it would mean the world. Thank you, and let's jump in with Larry Lepard. Larry, you're a well-known Bitcoiner and you've been an extremely successful investor. But for the viewers who are perhaps new to you, or this is their first time hearing you, could you just tell us about your investing background and then how you first came to Bitcoin?
Yeah, sure. So I graduated from business school in '83, and I went into the venture capital business. The reason for that is that my father gave me a book called The Micro Millennium that talked about how technology was going to change the world. I mean, Intel introduced the microprocessor in '71, and the IBM PC was introduced in 1981, my first year of business school. Mitch Kapoor came over and demoed Lotus 1-2-3 in 1982. And when I was at business school, I thought, wow, it's now Excel. I thought, wow, this is going to change the world. And so recognizing that in business, growing businesses are better than mature businesses. I wanted to get into an area that invested in growing businesses. So I sought out the venture capital area. And I went to work for a bank in the venture capital group. It was called Continental Illinois out in Chicago. It failed because of the oil loans they had made coming out of the oil bubble in the 70s. And then I went to another venture capital firm and another. And so I spent from 1983 until 2003 investing in technology companies, public and private, mostly private that then went public. It started off with disk drives and, graphics cards and really kind of basic stuff and memory and, all the early building blocks that made the PC useful. And then over time, of course, local area networking came around and the connectivity came around. This is long before the internet. And then when the internet was invented or became aware of it, I was fortunate I became aware of it because a guy gave me a card and told me to send the information to his internet address. This is 1993. And I said, what's that? And he said, well, it's you have a Novell, server in your office, and you can send email to everyone in your office, right? I said, yeah. I said, imagine if you could do that all around the world. I thought, wow, that's a pretty powerful concept. And he said, that's what it is. And he had a CompuServe dial-up internet address, which is the way you had to do it in those days. And I went back to my office. I told the guys working with me, I said, we're going to invest in this internet thing. This is going to be huge. And so we went out and started just calling, every company we could that was doing something in the internet space and making investments. And of course, this is 1993 and 4. So our timing was good and it worked out extremely well. And we rode that entire cycle up to the kind of 2000 peak, at which time it became incredibly frothy and kind of ridiculous. And even though underlying it all, there was technology that we knew was going to continue to go forward and there were going to be important companies built. As we all know, there was an enormous bubble in 2000. And so at that time, we exited the business. We actually had a fundraise. We had a $400 million fundraise to do another venture capital fund. The last one we managed was $200 million. The first one we managed was $30 million. And I think we did like 8 or 9X on that fund, maybe more.
Wow.
It really did well. Yeah. I mean, those were the days when venture capital worked, but a $30 million venture capital fund today would be a joke. But anyway, we had $400 million raised, and the investors said, we want you to put it all into the internet. And we said, that's not a very good idea. It's a bubble right now, and there may be places to put it, but the internet's not one of them. But if, we'll take your money and we'll invest as best we can. They said, no, you got to put it in the internet. And we said, well, we're not going to be dishonest about this. We also had 2 guys working for us who were Harvard MBAs who said, we want half the company or else we're going to quit. And they'd only been there 3 years, and they felt very entitled, and all their friends had made a ton of money in the internet. So my partner and I looked at each other and said, you know what, we don't need to do this. And so we shut it down. We gave the $400 million back. We fired the MBAs and we retired. And so I started coaching my kids' sports teams and, hanging out, more at home, and just kind of investing my own money. Which then I think it's one of the questions you sent pre the show was, it then led into what I did next, which is I started, kind of doing the same kind of investing with my own money and a few investors' money. And that's what became Equity Management Associates. And the notion was to find growth at a reasonable price. And so from 03 to 07 or so, I was doing a lot of that, mostly in India and China, which were 2 very growing areas. It's hard to find and buy the stocks, but we did, and we found some very cheap things. And then, of course, the financial crisis hit, the 2008 financial, and we could see the build up to that. I saw the build up to that. And the response to the financial crisis radicalized me for sound money. I mean, I'd always been a sound money guy. I'd always owned gold and silver, and I'd read all the Austrian economists, and I understood, the crime that going off of the gold standard was in 1971, and I recognized that we had a shaky fiat system, but I figured investing in technology companies that were growing was about as honest a living as you could get in a shaky fiat system, and so that's why I was a venture capital guy. When I realized the venture capital thing. That's the other thing I realized about the venture capital business. It was very corrupt. I mean, there was a lot of bad stuff going on, which we tried to avoid, but has only gotten worse since then. And so in any case, I got out of it. I was managing my own money, coaching my kids' teams, and the GFC happened. And I went, oh shit, I've got a pile of money here. I'm in my 50s and this isn't going to last. I'm going to live for another 40 years and they're going to inflate the value of this away. I've got to figure out a way to protect myself. And so I thought, I went back and I studied, okay, well, inflation, high inflation. Well, there was one period of time when we had incredibly high inflation. It was the 1970s. When we did go off the gold standard, it triggered that first bout of inflation, which Paul Volcker slayed. But I looked at the 70s, and what you realize in that time frame is when we had high inflation, the best area to invest in was gold and silver and oil. Gold stocks, silver stocks, oil stocks, they all compounded at 30+% a year for 10 years. And gold went from, $35, an artificially depressed reference price of $35 an ounce, which came out of Bretton Woods, to 800. And so I decided I was going to pivot and invest in those kinds of stocks and companies. And I went and I partnered up with a guy who was very good at this, a guy named Walter Cabot in Boston, some money and said, teach me how to invest in gold stocks. And so we went off and started doing that in 08. And then I just continued to grow in my gold stock investing experience, and did pretty well for a couple of years. And then we hit, and I was actually quite convinced, wrongly so, that that QE was going to lead to massive inflation. QE was going to lead to, a debasement of the currency. And it was under the surface, but not in the traditional sense. What I didn't see is the way that they were going to sterilize it from goods prices and other things. And all that extra QE was going to get shoved into asset prices and start to create the next bubble, which is the one we're in right now, called the everything bubble. And also during that time frame, I had my eyes out and I was watching all the other forms of sound money, and Bitcoin came along, and I heard about it from all the Ron Paul guys. I was heavily involved in his campaign, ran a couple of national newspaper ads for him in the 2008 cycle. And these people were saying, hey, this Bitcoin thing is real. You got to look at it. And I have to say, I was a skeptic primarily because I'd looked at the prior ones. eCash and, there had been 5 or 6 Bitcoin predecessors, all of which failed because they didn't have all of the pieces of the puzzle, and so as those predecessors had failed and Bitcoin came along, I was like, yeah, here's another form of, cryptocurrency. Here's another form of internet-based money. But, I know how this ends. We're going to have a double spend problem. We're going to, we're not going to have true scarcity. And so I was skeptical. But, it continued to persist. So when I got, I saw it go from 20 cents to $1, and then I saw it go from $1 to $1,000 and back to $300. And then, Coinbase came public. You know what? I should buy some of this just in case it does work. And so I did. But again, I wasn't, all in on it. And I said this in other interviews. I mean, I went to, I think it was 2014 or 15. I went to an MIT internet conference, and I sat next to a core developer, and I asked him, I said, how certain are you that this thing's going to continue to work? That this code is stable and that there are no problems, and, the block size is correct. And there were a lot of issues back then. And he said, not very, I mean, he was honest about it. He said, he said, honestly, it's an experiment. I mean, we keep fixing, we think it's going to work. We don't think there's a back door. We kind of believe in it, but there are no guarantees. And sometimes I'll make a change to the code and I'll go to sleep at night and think, holy shit, I've screwed the whole thing up. So as you can imagine, as a money manager, I was like, well, shit, if one of the guys who's working on the development of it isn't even sure of it, I can't put big money here yet. So I put small money there. I put, some money there in case it worked, but not enough. I mean, I wasn't Max Kaiser going all in, pushing it. I mean, he, kind of almost crazily believed in it, and he's proven right. But it was from a risk management perspective, it was a crazy bet at that time. But I was there, and I kept learning and growing, and Safe's book came out, and so on and so forth. And what's just happened is it's kind of been a linear progression of gotten completely orange pill to the point where, the gold stuff is really kind of falling away, which is not to say gold is bad. It's analog sound money and has been for 5,000 years. But, Bitcoin's going to crush it in terms of performance. So because of the adoption curve. So that's a long-winded answer to your initial question. Why don't you ask another one? I'll get another.
No, that was brilliant. That was brilliant. Thanks for all that context. And I believe one of the most impressive things is your ability to observe trends very early on. So getting into internet, I know I've seen in previous interviews you were an early investor in Microsoft, being able to observe these. I wanted to touch on that. What was it about the internet that, because 1993, 1994, that's really early internet. I wanted to ask you what specifically it was about the internet that made you confident in that it's going to be this huge growth trajectory. And do you see any similarities with Bitcoin now? There's a lot of skepticism and pushback with Bitcoin now. Was it a similar situation?
Yeah, that's a really great question. And I've said this before as well. I mean, I really do think there's a big analog here between the two things. I mean, they're both network based. They both are growing kind of exponentially. Their value increases as more users come on. I mean, they're very much like, Amazon or Facebook or any of these network based kind of monopolies, in a sense, Google. Yeah. So back to how did I see the internet was going to be what it was? I mean, look, I can't say I saw it all with great clarity and certainty. I mean, if I had, I would have, bought, Amazon earlier and held it, and we'll talk about why I didn't. But but what I could see is I could just see the basic functionality. I mean, I knew that we were moving into a more digital world. I knew that we were moving into greater, forms, more rapid communication. We had a Novell network server in our office. We could send each other email. That was useful. And when somebody described the internet to me as this is Novell for the entire world, you can send an email anywhere instantly and somebody can get it. You don't have to, put it in a FedEx overnight. If you want to get it to them quickly, it really was the fastest technology before the internet. I mean, when I was doing financial analysis on Wall Street and also on, as a venture capitalist in the 80s, I mean, if you wanted to get some information, there was no internet, right? So if you wanted to get some information quickly, you had to, call up somebody who would, get you a copy of it, and they would put it in a FedEx and they would send it to you overnight. I mean, or they would take it to a fax machine and put it on the fax machine. You get a 20-page fax of somebody's 10Q. I mean, this was the state of the art for moving information around pre the internet, which of course everybody forgets, but it was. And so I could instantly see when somebody described the World Wide Web to me. And of course, in the beginning, you didn't have Windows, you didn't have a graphic user interface on the internet. You just had green screen and email. But eventually when the World Wide Web popped up in 95 with the first browser, Netscape, it was like, oh my God, you mean to tell me somebody can put something up on a website, a document? I go click on that website, click on that document and see it, so I don't have to pay FedEx to send it to me overnight. I mean, it's just like, I mean, to me, the user experience made it incredibly obvious to me that if this could spread, it was going to. Now, it was hindered by a lot of things. I mean, you had these dial-up modems that were slow and you got dropped, and you had technology problems. And I mean, it wasn't easy to use, kind of in the same way that it's not easy to do self-custody today, with Bitcoin, right? I mean, there's a parallel there. And I couldn't necessarily foresee that broadband was coming, although, the modems got faster. I mean, they went from 2.4 to 9.6 to 14.4. And about that time, the cable companies started to offer basic broadband and so on and so forth. And you could see the technology just getting better and better in all of the pieces that made the internet work. And so, Krugman was saying it was no better than a fax machine. And I was saying, bullshit, this is a lot better than a fax machine. And the entire world's going to want it and use it. And I remember it was hard to use. And I remember, setting up my, at the time, probably 70-year-old mother on her internet account. She had a hard, she couldn't have done it on her own. But, excuse me, then AOL came along and that made it a lot easier for a lot of people. And, broadband came along, that made it a lot easier for a lot of people. So you could see all of that. So, all of the, and you could see that there were problems, but you could also see that technology was going to address them. And I think the same is true of Bitcoin today. There are problems. The layer 2 is still clunky. Not everyone knows how to set a Lightning transaction. Self-custody is clunky and hard to do. There's a lot of fraud. There are a lot of people getting ripped off. I mean, all of these problems are very big and very real, but they will all get solved because that's what people and entrepreneurs do. And so, there will be continual breakthroughs, just like in the internet, when we went from green screen to, Windows, that was an enormous breakthrough, and then we went from dial-up to broadband. That was another enormous breakthrough. And now here we are, 20, 30, 40 years later, and I'm talking to you halfway around the world real time. I mean, as recently as 10 or 15 years ago, you had to buy very expensive equipment to do video conferencing, and even then the quality sucked. And here you and I are doing it for, I don't know, what's your Zoom subscription cost you? $100 a year or something like that?
Yep.
Oh, excuse me. So, yeah, it's the same. I mean, it's the exact same model. And, in my view, Bitcoin is going to do for money what the internet did for communication and information sharing. It made the New York Times irrelevant. It made, I can't remember the name of there was a company that we used to buy the 10Qs from. They had a great big business, but, just copying and sending 10Qs, quarterly statements to you via FedEx, because as a financial analyst, you need them. It was a big business. Gone,
Yeah.
because you can just do them all online right now. I mean, but let me also talk about, why I'm so confident about Bitcoin and how I missed, well, let me tell you, let me give you some of my basic things about venture capital business, what I learned. Probably when I talk to new people going to the venture capital business, one of the things I say to them is, look, the major thing that you want to look for in the venture capital business is Gene Kleiner was the guy who told me this, or told it, not me, but he told it to, people. He wrote about it, is what he called dogs eating the food. You want to look for, something that is being used and there are more people using it every day. Okay. You want to look for obvious growth trends. And if you see an obvious growth trend, then you can extrapolate it out and say, if something is growing, all other things being equal, it's going to continue to grow. And one of my big winners in the internet space was a company called Netcom, which we put like $5 million into at a $15 million valuation. It got sold to AOL for, I don't know, $280 million or something. I mean, we made, $100 million. That's something, it was crazy. And when we were into Netcom, it was a dial-up service in the Silicon Valley. And the guy started it out of his garage, and he had people literally just dialing into his server, which was then connected to a bigger server, which then talked to the internet. And he was charging him $20 a month. And, when I found the guy, I can't remember the exact numbers, but he had, 500 subscribers, but he was adding 150 every month, and the 150 was going up. And so it was kind of like, holy shit, and before we know, by the time he was done, he had 200,000 subscribers. So, that kind of growth is just, that's evidence that something's working. And you're seeing the same thing going on in Bitcoin, by the way, right? I mean, there's just enormous, adoption and growth and increased users, and ETFs are bringing all that. Let me tell you about a couple that I missed. All right. So Amazon comes along and Google comes along. And when I started my own fund, the first thing I did was, okay, I'm going to start looking for growth at a reasonable price. And I found it in India. We were doing cell phone providers that were growing 40% a year and trading at 3 times earnings. So that worked. Okay. But I was looking in the US as well. And I saw that Amazon was growing. And I also saw that, Google was growing. But in both cases, particularly in the Amazon case, they weren't making any money. And so I was putting my old finance lens on it and saying, well, yeah, it's growing, but they're growing revenues, but they're making it up and losing money and making it up in volume. And they were able to do it because of ZIRP. Okay. In other words, their cost of capital was incredibly low. I mean, Jeff Bezos basically destroyed middle and Main Street American retailers because he had no cost of capital. And so he could, and he went around buying, he paid tons of money for warehouses and warehouse picking and all that. He could foresee where we were going, and he didn't have any cost of capital. It was stunning. But he wasn't making any money. And what I didn't realize is he was running the old monopolist play, which is to lose money until you've got a monopoly, and then you can increase your prices and make a ton of money. And so I didn't realize that was the game he was playing. And so I thought it was a flawed strategy, and so I didn't invest in it. And I deeply regret that. The one with Google was similar, but they weren't doing it so much on free capital. What I couldn't understand about Google was I used Google, but I never clicked through on the ads. I thought to myself, how does this, this doesn't make sense. I mean, these ad people are getting duped. I mean, they're paying a ton of money to put ad on Google and to get placements on Google, but it's not working. Now, I was wrong about that, but because of that, I couldn't see it. But they were both very similar kind of network businesses that got more valuable as more users joined, okay? So I'm not going to make the mistake, a third time. So when I saw Bitcoin and I realized what it was a network of money, and it was growing, steadily and exponentially, and that everyone needs money. And that it is, truly the best form of sound money. I mean, as Saylor and Preston have said recently, there's no deflection in it. There's just 21 million of them, and that's it. It's just, to me, it's such an obvious, clear bet. And, you said price predictions. I mean, I have no idea where it's going tomorrow, or I don't know where it's going to be at the end of the year, although I'm guessing maybe 100K or something, but I'm absolutely certain this is going to be 200K, and then someday it's going to be 1 million, someday it's going to be 2 million, someday it's going to be 8 million per coin. I'm talking that because that's just the natural progression of, the growth of a network. And so, that's why I'm pounding the table just to, and people getting into it, they think, well, I'm paying too much. I mean, I have a friend who's very, very wealthy, and, he knows my average cost is quite low. And, you just can't bear to pay 60 or 70 grand. I said, look, it doesn't matter. I mean, I paid, I don't know, whatever I paid. I mean, in the thousands for probably as an average. But, Max Kaiser was paying $2. And I don't regret Max. I just recognize that, I mean, someday my average cost is going to seem incredibly cheap to somebody who's paying $2 million a coin. So it's just, it's Sailor's point. I mean, it's going up forever, Laura. I mean, and so I mean, you can either decide, I mean, you're going to buy it eventually. People don't realize that. Everybody's going to buy this eventually. I don't think anyone realizes, or I don't think a lot of people realize that. So you might as well buy it now versus waiting and having to pay a lot more for it in the future.
Hey guys, I hope you're enjoying the interview so far. I just wanted to let you know, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to our daily 5-minute crypto newsletter, The Crypto Nutshell. It's a daily email that gives you the top expert predictions, any breaking news, and top on-chain analysis all in a nutshell. We write it up every single day and send it to you for completely free. All you have to do is click the first link in the description, enter your email, and you'll get our email into your inbox every morning completely free. It'll make you a better crypto investor in 2024 and will make sure you stay on top of all the news in the space. But for now, back to the interview. Yeah, one thing I do want to stress, and I think it's so fascinating and one of the strongest arguments for Bitcoin, or that can sort of flip the switch in people's heads, is people like you and people like Michael Saylor who have a proven track record in investing, and specifically investing in the early technology or early internet companies. And then they're banging the table and saying this is exact parallel, like it's playing out again.
Oh yeah.
And there's so many figures that it's like, if you're just paying attention, it's like, it's such a clear home run.
Yeah.
One thing, before we jump into Bitcoin today, there's one other thing I wanted to touch on in your story, because I think it's super fascinating. You said you started seeing red flags in internet companies in the lead up to the dot-com bubble, and you sort of started scaling out in that period. I wanted to ask you what the warning signs you saw during that period, and do you foresee any of them showing up in Bitcoin as well? Like, are there any bubble signs that you
that's
observe?
that's a really smart question. And the answer is nuanced. Okay. So, the internet really started to take off from an investment point of view in 95 when Netscape went public, and Netscape was the initial browser, right? And the run up from 95 to 98 was quite substantial. If you go back and you look at some of the leading companies at the time, Sun Microsystems, a microcomputer company, or Cisco Systems, which is the router company, probably the most important piece of the infrastructure of the internet, they all went up quite substantially, multiples of their value from 94 to, say 98. Okay. And it actually was getting pretty nutty. I mean, I was originally buying companies at, 1 or 2 times revenues in the early mid 90s, 93, 4, 5. And, by 98, they were selling at 5, 6, 7, 8 times multiples. And then in the summer of 98, something happened that's very relevant. Russia had a crisis, and actually there was a crisis in the Far East as well. But the bottom line is there was kind of a currency event that then led to long-term capital management blowing up. Long-term capital management was a highly leveraged hedge fund run by a bunch of PhD geniuses in the United States, who were absolutely convinced they had a money-making machine by playing the bond market using leverage. And of course, they blew up, as so many of the similar guys like that do. And this was in the August, September of 98. And they were big enough, and they had enough of the Wall Street players involved that they would have taken the entire market down and Wall Street down. And the Fed came in and they leaned on all the investment banks to basically bail them out, and they dropped interest rates, they injected a ton of liquidity, and they more or less papered it over. And the one investment bank that didn't play, by the way, is Bear Stearns, and of course that's why Bear Stearns was assassinated first in the Great Financial Crisis, because they hadn't played the game when the gun was put to their head by the Wall Street cartel. So that occurred, and that bailout, so to speak, and that cut in interest rates and that boost in liquidity got the next leg going. And honestly, I thought at that point in time, this internet thing has gotten a little bit frothy and it's about to cool off. But I was quite wrong. It took off on another leg, and then it really got nuts. From 98 to 2000, things went from 10 times revenues to 100 times revenues. And, pets.com came public. And you just had all kinds of insane shit going on, to the point where, just anything. You saw basic companies putting .com in their name. It was a nutty time. And my partner and I, we would sit around and say, are we the only two guys left in the world that think that a company is worth its discounted future cash flows? Because at the time, what was going on is you had all these Wall Street guys, you had Harry Blodgett and you had Mary Meeker, you had all these other shills, talking about, Blodgett was the guy who basically was, saying, he was touting the shit out of these stocks. He was working at Morgan Stanley at the time, touting the shit out of these stocks, and they found internal emails where he said, this thing's a complete piece of shit, and so which is, that's typical Wall Street ethics, right? And I think he was censured for, maybe banned for securities industry for a while. I can't remember. He should have been. Anyway, long story short, they were all touting the shit out of the, pumping the shit out of this thing, and it went parabolic, really. And it was nuts. They were all overvalued. Even Scott McNealy, who ran Sun Microsystems, came out and said, I wouldn't buy my stock. It's way overvalued. He was being very honest. And we could all see it, but we didn't know when it would burst. And of course, March of 2000 was when it did burst. And that interestingly occurred, just after the last liquidity injection, which was an Alan Greenspan printed a ton of money because he was worried about year 2K. But anyway, the story there was you could see all of the excesses, and the valuation extremes had just gotten completely nutty. And people were paying silly prices for anything that had internet in the name or .com in the name. And it just couldn't last. And of course, the last buyer showed up and then it cratered. So compare that to Bitcoin today and compare that to the markets today. It's, as I said, the answer is somewhat nuanced because I don't think it applies quite as directly to Bitcoin because you don't have a ton of Bitcoin public companies and you don't have, the crazy price appreciation. Well, you do have some pretty serious price appreciation, but you don't have, the nutty price appreciation recently that you had at the tail end of the experience with the .com companies. Where it does apply to today is in a stock like NVIDIA. Okay, I see, we're in a bubble driven by low cost money, and everyone post 2008, and I just tweeted about this. It's in the marketplace has basically, in the stock market, has basically learned to buy the dip. And I'm here to tell you that bear markets do exist, and I define a bear market as something more than a 20% correction. Recall that coming out of the 2000 bubble burst, the S&P went down 50%, the NASDAQ went down 80%. Coming out of the 2008 bubble burst, the housing prices can never go down in the country, which was a lie, by the way. They did go down in the 30s. But following the 2008 bubble burst, the S&P went down 50%. Some of the housing companies went to zero, and Lehman and so on and so forth. So, a lot of the people heavily involved in housing went down 80%. So, I think we've got another one of those coming, but at the sovereign credit level, which actually ought to be a positive event for gold and Bitcoin because they represent the antithesis of sovereign credit. They represent, distributed money that can't be printed by the government. And, when I talk to investors, the thing I always point out is that we know that the government is programmed to grow the money supply. They literally have to mathematically, because otherwise Stein's law applies. It can't go on forever. It's going to end. And so as a result of that, if one is trying to protect one's savings, one has to be in assets that the government can't print. And the government can't print gold. The government can't print silver. The government can't print Bitcoin. The government can't print housing, but they can tax it, and it's hard to move around, and it's illiquid. And the government can't print stocks, but guess what? The companies can print stocks. They can issue more shares. And so, everyone thinks that stocks are a great place to hang out to protect you from inflation. And look, in a hyperinflation, they do protect you. They represent a claim on the earnings power of a business. But during a severe economic downturn, stocks are going to get crushed. And so I would not be a participant in the stock market today, really in anything except perhaps the commodity stocks, which I am a participant in. I still have the fund with the gold and silver miners in it, and I'm committed to getting my investors out at a very large profit. And then at some point in time, I will transition that fund or close that fund down and probably spend most all my time on things related to Bitcoin, because I think Bitcoin is a better asymmetric bet than gold. I think gold will protect your purchasing power I think Bitcoin will grow your purchasing power. So, and look, gold is analog sound money. Bitcoin is digital sound money. That's the way I view it.
Okay, I want to touch on this point a little bit more because I kind of understand it. And as you go down the Bitcoin rabbit hole, you sort of get sucked into economics, a sound money rabbit hole, and keep going deeper and deeper. And I've spoken to a few big figures in the space, but this is the one thing I can't really wrap my head around is we see inflation getting worse and worse. The debt keeps ballooning and ballooning, and then the interest repayments on that debt keep ballooning. I don't understand where it all ends. Where does this debt spiral? Like, do we see a massive blow up? And is it in 10 years? Is it in 20 years? Or can they? Yeah, I don't understand. How do you foresee this ending? Do you see a big blow up? Do you?
So you've asked the $64,000 question that really none of us have an answer to, and it's extremely hard to game it out and to know. I mean, look, first of all, nobody knows. Okay. And it's all just a matter of probabilities. I mean, let's examine some things we do know. We do know that countries that have behaved the way the United States has behaved, I mean, we know this from Reinhardt and Rogoff's paper, have generally speaking ended up with debt crises, which either means that the debt becomes worthless or that there is high inflation or hyperinflation. And so the debt becoming worthless is kind of an economic collapse where the debt cannot be repaid. And so it becomes worthless in a deflationary way. Or the debt becomes worthless because the monetary authority decides we're going to make all your claims money good, and the way we're going to do it is just by running the printing press. And so, that's Weimar or Venezuela. And then there are iterations between those extremes. You could maybe just have a very high period of inflation during which GDP would grow. And if for some reason, somehow you could suppress the growth in the debt, you'd get back to a more balanced world. I mean, there was, debt to GDP in the United States today is about 125%. Debt to GDP coming out of World War II was about 130% because we spent a ton of money to win the war. What they did in that instance was they actually put in financial repression, and they had yield curve control on the bond market, and so the bond market got robbed of because we had pretty high inflation in the early 50s and 60s, and bonds didn't pay you for it. But we also had a much different country back then because you had everybody coming back from the war and buying cars and buying houses, and the baby boomers, or the hero generation of World War II was young, and they were just about to create a ton of babies, which was demographically going to create a ton of growth. And so we kind of, quote unquote, earned our way out of it. We don't have that today. We didn't just win a war, and, the baby boomers are now old, and they're actually not contributing to society. They're taking away from society by, claiming their Social Security and Medicare benefits, which is part of the reason why the government's out, government finances are so broken up. So, it's extremely hard to know, but I think that we can assume there's several things I do know. One, they have to print more money or else the system will collapse. And then two, I strongly believe that they will print more money because they don't want the system to collapse. And as bad as inflation is, it's viewed as a lesser evil than having the system collapse. And I mean, a perfect example is in 2008, Henry Paulson went to, Nancy Pelosi and said, you got to give us TARP or else the ATMs aren't going to work. I mean, this is the game that the Federal Reserve criminals always, and banks and criminals always use. I mean, look, in 1913, when they set up the Fed, they basically created a system of heads we win, tails you lose, because they get to gamble with the people's money and they get to take a ton of risk. And all these guys in 2008 made a ton of money. And then when they were wrong, they got bailed out. I mean, if it was capitalism, they all should have failed. Lloyd Blankfein used to be on Twitter holding forth on all kinds of subjects, and I used to reply to him and say, shut the fuck up. You should be bankrupt. The government bailed you out. And he got off at Twitter. I credit myself for doing that because I love Twitter because you can say what you want to these people, and they are criminals. I mean, it's a heads they win, tails we lose game. And 2008 was just an enormous crime. It was just an enormous crime, and they're going to do that again. I mean, that's what's going to happen. They are going to, at some point in time, declare kind of quote unquote force majeure. And maybe now there's some signals that maybe they're going to try and do it via war. There's certainly a lot of, rumbling around, about, they're certainly trying to start a war. COVID was a nice distraction, allowed them to print a lot of money. And we just know that the next big print is going to come. And at some point in time, what's going to happen here is that everyone's going to wake up and go, we're in a situation where they are never going to be able to stop printing. And this is going to be kind of a Gresham's Law sort of moment. And at that point in time, people are going to abandon the existency currency units of the dollar, and they're going to run like crazy into things that cannot be printed, gold, silver, and Bitcoin. And, to just put a point on it, I mean, some people think they're too late on Bitcoin. I mean, we're such early days. There are hundreds of trillions of dollars of financial assets in the world. I mean, there's the equity markets worldwide are estimated to be 150 trillion. The bond markets worldwide are north of 100 trillion. So just those, I mean, skip real estate, skip a lot of other stuff. That's $250 trillion. And, and there's cash and currency too. It's $250 trillion of financial assets. All the gold in the world is worth about 13 trillion right now. And Bitcoin is worth about 1 trillion. So just think about it. What happens when some piece of that 250 says, good God, I'm getting fried here. They're gonna create so many currency units that my currency unit's gonna be really diluted. It's like watering the beer. I got to get out of here and get some kind of currency that I know they can't dilute. They're gonna that 250 is gonna come crashing into Bitcoin and gold, and so gold's gonna go to 10,000 or 20,000, and Bitcoin's gonna go to 1 million. I mean, that's what's happening. Now, not tomorrow, right? Because the awareness of the masses. It always takes time, but anyone who's listening to this podcast is obviously, thinking for themselves and somewhat ahead of the curve and kind of realizes intrinsically that something is wrong. Something's wrong with the system. Something, I mean, my kids realize there's something wrong. I mean, they're in their 20s, they're doing fine and they can't afford a house. I mean, I could afford a house in my 20s, not much of one, but I can afford a condo. They can't, and it's a function of the broken system. So, yeah, I don't know. I got off track from your question. Bring me back to what did that answer?
No, that
what
was
you
good.
I don't even
Yes,
know.
it did. It did. It did. It was where does this all lead to? And I like your analogy that it'll be like a light switch as people begin to realize more and more. And I think, I'm in my mid-20s, and just speaking to people, I think it's become a lot more in the front of people's mind ever since the pandemic. As you said, no one can afford a house. Cost of living has exploded in every single major city. It's all getting out of hand, and people are sort of diving into the rabbit hole of beginning to do so and understanding why. And I think this is where, everyone comes to sound money. Jumping ahead, I want to touch on Bitcoin today.
Sure.
Yesterday we dipped under 60K, which I think a lot of people was surprised to a lot of people. The entire year has been a watershed year. We saw the approval of the ETFs, then we had the halving. But ever since the halving, it's been chopping around, and then it's sort of been dumping over the last week. I'm sure you've seen the rumors of Mt. Gox releasing 9 billion onto the market, the German government selling up to 3 billion. There's always the classic FUD cycles that go around. I wanted to ask what your thoughts on that were. Is it all just par for the course, or any reason for concern?
No, well, first of all, I have no reason for concern longer term. I mean, that doesn't bother me at all. I mean, look, Bitcoin's a strange beast, and predicting the price moves day to day, week to week, month to month, who the hell knows? And it surprises you almost, at least in my experience. I've been watching for a long time. I just dollar cost average and hodl. I don't sell. So, the ETFs are an enormous positive development. They really are. They give a lot of money access to the asset, and even today, I mean, the assets. I mean, I think it was down to 60, high 50s, 60. Look, it's still up. I don't know, 40% for the year. I mean, it's not like it's it's not like a disaster. I mean, a year ago this was 30, and the year before that it was 16. So, it's still kind of working, and it's going to continue to work. And so, I think the short-term swings aren't that relevant. I mean, I don't know why the price is where it is today. I don't really watch that sort of stuff that much. I mean, certainly the Mt. Gox coins are a possibility. I would think, I've noticed there've also been a lot of hedge funds that are short it. I think they're going to get their faces ripped off. I also think that one explanation that was given to me, and I think this might make some sense, is that the halving just occurred not that far ago, a couple months ago, and the miners, their reward was cut in half. And some of them had Bitcoin on their balance sheets, and some of them probably aren't making much money right now or having cash flow issues. And so I think the miners are probably in a situation where the marginal ones are having to sell the coins they've got to keep the lights on. And they're just hoping that the price is going to go higher, but it hasn't yet. And, and we saw the hash rate dip a bit, not hugely, but somewhat. I would have thought it would have gone down more. And I'm guessing that there are probably some miners that are operating uneconomically right now that haven't quite thrown in the towel yet. They're leaving the machines on because they're thinking, well, it's going to come back up. And until we get kind of that capitulation and they say, oh, fuck it, I'm throwing in the towel, I'm turning these machines off. Hash goes down a bit more. And then at that point in time, it can come out of the blue. I mean, we all know how this thing happens. I mean, the thing that's so wild about this asset is the way that it can really move and move fast. And that's why I say, like the hedge funds that are short this stuff, they're about to have a deeply religious experience. I mean, they don't understand. They don't understand that this shit can go up, 50, 100, 150% in months, and so, I mean, you're going to see those shorts are going to get covered so goddamn fast. And, and so, I know Samson, I really like him a lot. He says $1 billion, within a year. I sure hope he's right. I don't think he is, but, I'm hard pressed to see how we're not at 100K by the end of calendar 2024. And I think this cycle takes us to 200 or 300K. And maybe at that point in time, we're a little overbought and, we come back around, come back down a bit, but, it doesn't, I'm thinking so kind of multi-year that I really, the ups and downs of the months, and it's just like, in fact, I saw the 6th and I thought to myself, maybe I have something else I could sell. I thought, maybe I should sell that and go grab this right now. I think if it goes to 50, I'm definitely doing that. I'm selling this other asset. So, because it's crazy cheap at these levels in my view.
Nice. Yeah, I love that. We wrote up because we send out a daily newsletter, we wrote up a little like hopium thing because it blows my mind that an asset can be up, as you said, it was $30,000 a year ago, so it's still up over 100%, and people are losing their mind at a 5%, 4% dip. And if you actually go back and look at 2016 and 2020, immediately following the halvings, you saw this dip sell-off, which I think would be the miners capitulating as well. So it's happened before, and we've seen it happen before back in 2016. One point to touch on that, I've seen you aren't a huge fan of Plan B's stock-to-flow model. He did a disservice to people back in 2021 when he says it's 100% going to 150K. Do you think are you in the Michael Saylor camp in that all your models will be destroyed? It's too much of a beast to try and model it? Or do you think, are you familiar with the Bitcoin Power Law model?
Yeah, I am. And Fred Krueger's a good friend, and I respect Giovanni. And I'll comment on that. I mean, look, you can't throw that out because mathematically and statistically, it has worked. I mean, in other words, there's a 97% correlation, with looking backwards, admittedly, with the model that they've developed. And so, as a base case, I place some weight on that model. It's quite positive, by the way. And it gives them a lot of leeway because they do point out that, they have a curve, they have a line at which they think it should appreciate by, but they also point out that it goes above and below that line, sometimes as much as 1 or 2 standard deviations above, which would get you probably to 100, 150, 200K today. And sometimes half a standard deviation below, which is kind of where the 15K was, a while back. So, so all other things being equal, I don't dismiss that model. What I think, I'm with Saylor though, in that I think that that model could break. And let me explain why. This goes to kind of the Gresham's Law piece of it all. And that is to say, and kind of the Malcolm Gladwell adoption curve. I mean, at some point in time, we're kind of, I kind of estimate we're at about 10% adoption of this thing, worldwide, I should say developed worldwide because, third worldwide, not even close. But, developing. I mean, I'd say maybe 10% of the investors in the world have some or are aware of this thing. Maybe I'm high on that, but at least they're aware of it. 10% of the world's aware of it. And if suddenly the monetary debasement gets a lot worse and that occurs very quickly, i.e., let's just do some scenarios. Stock market blows up, bond market crashes. Fed comes in and says, we're doing yield curve control, which is basically saying we're going to buy all the bonds necessary to prevent interest rates from going to the moon, right? Which is what they did after World War II. Fed balance sheet goes from 7 trillion to 20 trillion, which is what it would do, because the bond market would say, sold to you, sold to you, Fed. I.e. a big print, a big monetary event. Bitcoin and gold are going to take off like scalded dogs. And so, that would break, in my opinion, or could break, and then it becomes self-fulfilling, right? Then everyone's kind of like, this is like, fire in a theater, right? I mean, a few people sniff it, they hit the exits. A few more people sniff it, they hit the exit. Somebody finally sees fire, says, fire. There's a fire here. Everybody wants to get the fuck out now. Okay, well, that's breaking the power law model, right? And that's Gresham's law on a massive scale. If and when the problems become so pronounced and so widely known that everyone decides, I got to get the fuck out of these currencies right fucking now, okay, then you're going to see, Bitcoin going to 1 million or 2 million. I mean, it's hyper Bitcoinization, really. And I think that's, I don't put a 50% probability on that, but it's not a 0% probability. It's maybe as high as a 20 or 25% probability that kind of an event occurs in the future. Now, if the monetary authorities are able to kind of, prevent that big print and prevent that loss of confidence, well, then it might just be kind of continued adoption along the power law curve. But we don't know. I mean, historically, if you look at other monetary systems, there's a lot of history that supports the case that I'm describing there. That it could, that could happen. It's somewhat different this time. We are the world reserve currency, etc. So tough to say. And some people have called me a doomer for saying that hyperinflation is in our future. I mean, and obviously hyperinflation will be very painful, and I'm not rooting for that, but, and I'm not a doomer. I'm very optimistic on how the world will work and look once we get through this broken money period that we're in, as Lynn's book is named. I mean, but we do have to get to the other side, and getting from here to the other side is likely to be unpleasant. I mean, there's going to be winners and losers here. It's not just, we can't just snap our fingers, have a new great monetary system and nobody's going to lose. I mean, the losers might be the fiat masters, but somebody's going to lose. And you can be sure that the fiat masters don't want to lose. They're going to do everything they can to screw the sound money people. So, it really is kind of a war. And, we are all sound money warriors, and we're taking on these fiat people, and we're going to slay them. So.
No, fantastic. Yeah, I haven't heard that perspective before, but I do agree with you that they're probably not the most likely scenario that the Bitcoin power law model could break to the upside. But yeah, you look at debt, you look at everything going on, and it definitely is a real possibility. You mentioned it a few times before, but I will ask it just because I know the audience loves it. Saylor, in his different talks, and when I interviewed him, he thinks we've just entered the Bitcoin gold rush, and we're going to see the majority of adoption and the lion's share of the price appreciation over the next 10 years. You said you wouldn't be surprised to see Bitcoin at around 100,000 at the end of this year, and then in this cycle reach 200, 300,000. Is that accurate?
That's accurate. And by the way, I very much agree with Saylor's view. I think what he's describing is we've kind of hit that tipping point where these next 10 years are going to be really good. Yeah.
And yeah, do you think that's when we see, you estimate we're at about 10% adoption, that's when we see the majority of adoption and the majority of the price appreciation? He thinks we go up on average at about 40% compounded per year. Do you think that is
But
accurate?
I agree with that, and that's slightly higher than the power law model predicts. I think the power law has it at 40% for a few years, and then it kind of trickles down into the 30s and 20s. But yeah, that's how I see it, pretty much.
Fantastic, fantastic. And I wanted to get your answer on this question because you mentioned that you don't sell Bitcoin. You're always just dollar cost averaging into it. And you have a fascinating case study in your buying of Microsoft and then selling. So I wanted to ask you this question. The most persistent question we get back to us on our newsletter is people thinking they're late to Bitcoin. Back in the day, it was a big deal to get to one whole Bitcoin, and now it's sort of changed to 0.1 Bitcoin because cost of living's up. People can't allocate as much capital to it. What would be your response to early investors or people that are new to Bitcoin that think they can just get to 0.1 and they're thinking that they've missed the boat on it?
Well, I don't think anybody's missed the boat. I mean, I think we're still very much in the early days, and it's going to 10x and that's going to 10x again. So, I mean, from an investing point of view, you don't want to miss something that's going to go up 100x and maybe 1,000x if you talk 15, 20 years out. So I don't think, and 0.1 is going to be a meaningful amount to have. I mean, it's being a whole coiner is going to be an enormous deal in a few years. And so, I don't think you missed the boat. I mean, I think you've got to understand, what's going on here and the way this can continue to compound in value. I mean, you cited the Microsoft example, and I told the story in Madeira, when I was on the stage with Saylor and Lynn and Preston. And, I bought Microsoft at what would now be split adjusted 6 cents, and the stock is worth hundreds of dollars. And so it was, like 4,300 times your money, or, 4,300 times your money, right? I mean, it's nuts. And, I bought it in, this was in 86 when they came public, or 87. And I sold it a few years later in order to buy a condominium because I'd made money on it. It had gone up 2 or 3x. It's been a good investment, but I needed the money to buy, a place to live. And I'm not angry at that decision. I'm angry at the fact that I didn't sell 2/3 of it and keep a third. Do you know what I mean? And find the other third somewhere else. I probably could have found it. There's something I could have, done some way I could have gotten the other third. But anyway, and so I think that the key is people don't understand the value of compounding something at, 20, 30, 40% a year over a bunch of years. I mean, this is how great fortunes are built. And so, and this is a truly unique asset, just as Microsoft was a truly unique asset. I mean, they had the protocol, so to speak, for running PCs, and PCs were, about to go from being an expensive toy that, replaced a typewriter or, a Wang word processor to becoming something that everybody had 6 of in their houses. And, so, and every single one of them that ran Microsoft's, software needed their product. And of course Apple came along and provided an alternative. But the point is that, and that's what's going to happen here. I mean, everybody is going to need Bitcoin, and Bitcoin is going to be the monetary standard of the next, millennium. And so it's kind of like, Jesus, I mean, here you are, you got a chance to buy this 15 years in for something that could last hundreds, if not 1,000+ years. I mean, you're not too late. You're really not too late. So my view is, buy what you can, forget about it, and, sit back and enjoy the fact that in Bitcoin terms, you're going to get, in fiat terms, you're going to get richer and richer. As Bitcoin becomes more and more of a replacement for fiat, because it's just a much better form of money. I mean, that's the thing. I mean, at the end of the day, I mean, some people think, well, it's this magic internet money or whatever it is, or, you guys are all a cult, or, it's a bubble, or no, it's none of those things. This is a technical innovation. This is the invention of provable digital scarcity. And so, I love the way, Saylor in some of his recent talks, he's talked about how, inventions happen and then they change the world, and they don't, you can't go back. I mean, the one he used recently, he talked about how, when a guy invented a perfect clock, we were then able to, and I've been at Greenwich Mean, the Greenwich Mean Academy, or Greenwich Mean Station in London. The ships were able to set their clocks to a certain time that allowed them to then use a sextant to shoot, the stars and figure out where they were and navigate, and so suddenly navigation became usable. I mean, in the same way that optics improved, the ability to look at the stars, which blew up the Copernican model of how the stars and the Earth circulate, are related, and suddenly we realize that we're circling the sun, not vice versa. And so, the printing press comes out, and could you foresee that the church was going to fall and that everyone was going to be able to read, and we're going to have libraries, or that we're going to have the internet where you could literally get any piece of information anywhere in the world instantly? I mean, no, you can't really foresee these things. But here we are. They've invented a form of money that solves the biggest problem that every form of money has had for thousands of years. For thousands of years, money has been debased, full stop. There's been no money that hasn't been debased for thousands of years. Even gold. Gold, it grows at 1.7% a year. In 40 years, there'll be twice as much gold on the planet. It gets debased. Now, that's a lot sounder than fiat, which grows at, in the U.S., 7 or 8% a year since 1971. But monetary debasement has just been a fact of life for thousands of years. Bitcoin just solved that. Totally solved it. Completely, okay, holy shit. Guess what? The world is going to look a lot different now that we solved that problem, right? And what people aren't thinking about is just, what does that mean? How different is the world going to look? And, I don't even know, because I'm sure, just as the internet took paths that I could never have foreseen. I mean, could I foresee that I was going to do all my shopping online and Amazon was going to deliver shit to my house in under a day? No, I couldn't foresee that. I had no fucking clue when I was investing in dial-up internet that was going to happen. Do you know what I mean? But I knew that sending email messages to people halfway around the world was going to be useful. And so I invested in it, right? And, do we know how Bitcoin's going to evolve and how it's going to get used? I mean, no, we don't. But we do know that Bitcoin solves the problem of monetary debasement. And that's been a very big problem in human society for thousands of years. And so we just solved it. So, okay, I'll bet on that. I think, I'm guessing that over time, individual free-thinking humans, just like you and me and all the other people who've adopted Bitcoin, are all going to look at it and going to come to the same conclusion and go, you know what? This solves the problem of monetary debasement. I want some of that. That works. Let's use that. Why would I ever price something in fiat when I know that fiat is just, it's bullshit, that it can get diluted? I'm not going to get paid back in real terms. I want to get paid back in Bitcoin terms. So, yeah, it's hard for people, I think, to get their heads around that. But I think once you do, there's really no going back, and I think, your generation is going to look back and think, I often joke about it. You can say, so the price of capital is the most, so capitalism is based on increased efficiency and increased productivity, right? That's what Adam Smith taught us. Supply and demand. The baker, makes everyone's life better because he bakes bread and he pays the guy who grew the wheat, and the guy who buys from him pays him, and so on and so forth. And so productivity, specialization and productivity, efficiency is what has brought all the wealth that we have in the world to the world. Not growth, as Keynes would say, not animal spirits, not all that bullshit. No, it's efficiency, okay? And so, the price of money, so efficiency is achieved by investing in the proper things to create productivity. The cotton gin, you used to be able to, pick 5 pounds of cotton in a day. The gin came along, it can make 50 pounds of cotton in a day. So it's 10 times more effective for one person, right? So efficiency is what you want. And the way you get efficiency is you invest in the right things. So the cotton gin was an obvious no-brainer investment. We're going to make these things because it's faster, better, cheaper. Okay, fine. So basically, if you're looking for efficiency in money, if you look, so to get efficiency, you've got to invest in the right things. To invest in the right things, you've got to have the right price of the money. When you set the cost of money at zero through ZERP, that's just a crime, because basically people can go borrow money for nothing. They invest in productive industry, and that's why billionaires are billionaires and the rest of us are paying too much for shit, okay? So, if you set the price of money correctly, then you get an efficient investment framework where people will invest in things that have a return on them, and they won't invest in things that don't have a return on them. They won't make malinvestments. And so, having the money not deflect is the key to doing that correctly. I mean, if the money is moving around, if you price fix the money, I mean, here's the point I was trying to make earlier. My grandkids are going to say, I can't believe those idiots were letting 12 people in a room set the cost of capital. I mean, what the fuck were they? I mean, they will look at that the way that you and I look at medieval people who were bloodletting. I mean, they bloodlet, George Washington, right? I mean, they thought that, draining his blood would actually help him. It killed him at the end. I mean, he was sick anyway, he was going to die. But the point is, it's insane. The fact that we have a monetary system where we've got 12 people in a room, setting the policy, the interest rate policy, it's fucking nuts. It's why the world is so broken. And it's why we've got to return to a monetary standard that is sound. And once we do, I think people will be amazed at the benefits that we all reap from it. I mean, I look at from the time I was a kid in the 70s to present, I look at all the technology that's come along and how much it's advanced things. I mean, it's stunning, right? I mean, it's just unbelievable. And so one would think with all of that, we would be working 30-hour weeks and taking big vacations and, there'd be wealth everywhere and everything. No, none of that shit, because it's all gone to the wrong places. It's all gone to the people at the top who control the monetary system. And this is why, 1% of the United States people control 50% of the U.S. wealth. And the people at the bottom are still poor. And it's all because, the people who have tilted the playing board in their favor, they've broken the system. And your generation is going to be screwed if we don't fix the system. The good thing is, Satoshi came along and gave us this, this God-given, I believe almost, spiritually driven solution to this enormous problem. And, and then we're just going to let the marketplace do its thing, which is people are going to be faced with choices and they're going to make the choice to adopt this. And the thing that I think a lot of people don't understand is just how much better they're going to be if they do adopt this versus if they don't. I mean, you don't want to screw this call up. I mean, your progeny are going to hate you if you knew about this shit and you didn't buy it. I mean, they're just going to absolutely hate you, and they're going to think you're a legend if you, sacrificed and sacrificed, didn't buy that expensive car and bought a whole coin instead, because that whole coin is going to be worth $10 million. Not that far out, by the way. I mean, it's, so to me, it's all pretty obvious, and yet, most people are asleep at the switch and they don't see it, or their biases are preventing them from buying it. And I get it. I mean, that's the way things get adopted. But the earlier you adopt this, the better off you'll be.
No, brilliant answer. And you gave some you made some very important points there. One of them being it is a deeply flawed system, and the other one being it's one thing Saylor said to me. He said, if you go back and you read Will and Ariel Durant and their breakdown of all civilizations, if one thing is guaranteed, it's monetary debasement, and they'll just inflate the currency away into nothing. And it's like, if you study history and you see this constantly, it's happened over and over and over again. And it's hard once you see that to not then jump down the Bitcoin rabbit hole.
That's exactly right. I've read that book. It's a great series of books. It's a great series of books.
It is. It's super interesting and very, I feel like it gives you a different perspective on the world, which is why history is so important. And one other point, I don't know if you said it on Twitter or I've seen you say it in an interview, is on the point of how early it is in getting to 0.1 Bitcoin or 1 Bitcoin. I'm not sure the exact stat, but I think there's something in the realm of 90 millionaires in the entire world. There's only ever going to be 21 million Bitcoin. And I think it's an important point for people to wrap their head around, that if every single millionaire wanted to just get to 1 Bitcoin, they couldn't do it. And then you have people like Saylor buying hundreds of thousands of Bitcoins. So, yeah.
Yeah. No, I think that's right. I think, I've seen numbers of closer to 50 million millionaires, but it doesn't really matter. I mean, 21 million coins, 50 million millionaires, everyone can't have one coin. I mean, it's really rather stunning to me. And by the way, I mean, arguably, I mean, the people who bought a little while ago at 15,000, boy, did they get a deal, because I was paying 15,000 in 2017. And, we hadn't had the fork wars. So many of the obvious risks that existed have been taken out of it. I mean, as Saylor points out, one of the big risks that just disappeared is, the U.S. government's going to seize it. Now, that could change in the future. They could change their views as they realize how existential this is. But for now, anyway, they've said, and maybe they did this because they want to have it all inside their corral so they can grab all the ETFs. I mean, that's a conspiracy theory, but it might be logical. But, but for now, anyway, they basically just said, yeah, it's legal. I mean, I used to talk to a lot of my friends, and they'd say, I'm not going to do that. The government's going to kill it. Oh, really? Well, then why did they just approve the ETF? Now, which isn't to say that in the future there won't be a battle on this topic. There might be, but it's encouraging that we're making a lot of progress. And I'm not a big fan of all the other cryptocurrencies, but I do like the fact that the people in those cryptocurrencies are making a lot of noise the way we are. And isn't it interesting that we were able to get Trump to kind of endorse the notion of being pro Bitcoin, recognizing there was a voting block there, and then of course Biden had to respond. So. We're obviously getting to the point where enough people are in this stuff that, it's a political block now. And politicians, there's one thing for sure, they want, and that's votes. And, if we've got a lot of votes and a lot of people make a lot of noise, it could have an impact.
No, very true. And that's a great point you bring up on risks, because I believe that 2024 is really the year that Bitcoin crossed the chasm, in that there is no existential threat anymore. And we've seen that in the last few months with Donald Trump essentially endorsing it. Now, I'm not sure if Biden is accepting crypto payments, but it seems like he's pivoted on it. Do you agree? Do you see any other existential? Is there any threat to Bitcoin now, or has it pretty much all been covered at this point?
I think there's always the technological threat. I mean, I think there's, it's not zero. Which is why I always say gold is a CDS on Bitcoin. But I'm pretty confident that it's technically sound, and that after 800 and some odd thousand blocks and 15 years, we're kind of in the clear there. I don't really know. I mean, look, the only thing that I think I used to say that there were two threats. One, technology, that, it would fail in some way, but like I say, I think we're through that one mostly, if not completely. And then the other thing I would say is that, if people were ever to suddenly lose interest in it and just decide they didn't want to do it anymore, or kind of walk away from it, it got boring or whatever, that would maybe not be a good thing. But I don't see that happening. I don't see any evidence of that. I mean, I see adoption is increasing, hash rate is increasing, investment in the space is increasing, users are increasing, wallets are, all of it. So, absent a severe change, I mean, this goes back to my earlier comment about dogs eating the food. I mean, there are a lot of dogs eating the food, and there are more dogs coming to the party. So, okay, it seems, so explain to me why that's going to change. What's going to make that change? I mean, I just don't see it. I mean, it's like the internet. I mean, there were times, the internet's dead, or the internet's slowed down, or Amazon's dead, or what, I mean, there will be ebbs and flows in any technological adoption cycle. I mean, Microsoft had good years and bad years. Apple had good years and bad years. I mean, it's not like straight up. There's always FUD, and there are always threats. There are always problems. I mean, and there'll be a step function. I mean, we'll get, I think we'll get some good layer 2 stuff coming in the next few years, which will make it much, much easier to use. I think we'll get some much, much better self-custody stuff, Fediment and other things that will allow people to more easily, handle their coins and so forth. And the ETFs, I think that'll be much more widely known and distributed. I mean, money tends to chase performance, and even with this pullback, I still think this is one of the best performing assets in the last 12 months, if not the best. I'd have to check. And so, guess what? That will get picked up, and people will go, hey, yeah, thanks. Thanks you, Mr. Financial Advisor. I'm glad you put me into the ETF. I noticed we got 2% Bitcoin. I noticed it's the best performing thing in my port. How come we're only at 2%? Why isn't this a 20% holding? I mean, what's going on here? Right. I mean, so, look, all of it, it's coming. It's coming. But, I mean, remember, I was in this thing in 2013, and, I was in it in 2017. I mean, 2017 is now, what is that? That's, 7 years ago. Right. I mean, it's not an overnight success. It's just a continually building success. Just like, Microsoft wasn't an overnight success, but the relentlessness of compounding is something to behold. I mean, you grow something north of 10% and you compound it year after year after year, you get big. You get really big. I mean,
Yeah,
I
no,
remember.
very true. Very
Yeah.
true. Yeah, and if you like 40% per year for the next 10 years doesn't sound like this insane number. And I
No.
think a lot of people come into Bitcoin, or people new to Bitcoin or crypto, think it's a get rich quick scheme, and it's all gonna happen overnight. But that's a bad way of looking at it. And as you said, over a 10-year span, a 40% compounded increase it's mind-blowing wealth that you'll be able to build.
Yeah.
I want to touch on that point, and of course, this isn't financial advice or anything, but you have a much longer career of investing and a much more experienced investor. For people that are new to the space or just coming to Bitcoin, I think there's a strong notion that people think they'll be able to time buying and being able to sell out at the top. Do you think dollar cost averaging and never selling is the best strategy for 99% of people, the large majority of people? That's the best way to do it.
I really do. I really do. I mean, obviously, I think if you don't have any, you can make an initial plop buy, here, because I think it's, kind of cheap. But, I mean, the only time I've seen people get hurt in it is when they over allocate, plop buy, and then you get a pullback. I mean, I think that, those of us who've been in it for a long time, we're very much aware of the fact that there are pullbacks, and some of them are substantial. And so, I mean, how do you get hurt in Bitcoin? You buy it at the top, you have a pullback, you freak out, you panic, and you sell it when you're on a big drawdown. I mean, that's how you get hurt. I mean, I've had several big drawdowns in my, my holdings over the years. And, I mean, I bought a ton of it in the 2017 Thanksgiving run up, because I was convinced that was it and it was going to the moon. And, the next year it was down to 9. And the year after that, it was down to 44,500. And I doubled down on both of those. So, and I bought some at 60, but I also bought a lot at 15, but I mean, I bought some at 60 Sam Bankman-Fried, and I bought a lot at 15 post Sam Bankman-Fried. So the point is, you've got to, I mean, averaging it over time makes sense. And I think that, you've got to look at it as, this isn't something I'm going to sell, no matter what it does. And in fact, if it goes down, I'm going to view that as an opportunity to add more at cheap price.
No, great answer. Great answer. And just coming to the end of the interview, I love to finish up with this question. I get to interview a lot of successful people like yourself with brilliant careers, and I love to finish on this one. If you were starting it all again, say you were in your 20s or early 30s, what advice or piece of wisdom would you give an earlier version of Larry Lepard on achieving success, under the guise of achieving success?
Yeah, boy, I don't really know. I guess it would be have an open mind and read everything you can possibly read, even things that contradict your initial conclusions. I think that analysis is based on information, and you've got to put as much information in the machine as you possibly can to have a chance at coming out with the correct analysis. I think that, change is an ever continuing process, and, be willing to test your assumptions. I was very skeptical of Bitcoin, but in the very early days, and yet, it won me over, because I kept investigating it, studying it, learning it, getting deeper into it. And so, there are probably people listening who are skeptical of Bitcoin. I would suggest, and maybe not, but I would suggest that that's fine. I mean, you should think critically about everything in your life. But if you continue to read and learn about this thing, you kind of come to see the elegance of it. And those of us who are, deeply convicted on it, there's a reason for that. And so, but I think everybody's got to come to their own conclusions. You shouldn't take, my word for it or Saylor's word for it or anything else. I mean, we've reached conclusions we've reached because of the experiences we've had. Other people might have different experiences, reach different conclusions. I don't know. I guess my piece of advice would be, just keep reading, thinking, and analyzing, because, the future is very uncertain. None of us know exactly what's going to happen. But history does give you some clues as to trends and so forth. And so, and pattern recognition, I think, is one of them. From an investment point of view, I think pattern recognition is probably the most important skill that a good investor has. And they can see things, they can see them, how they've happened before. They've studied the past, and they recognize that, it's, as Mark Twain says, it's not going to be exactly the same, but history is going to rhyme, look for the rhyming in history, and then I think you'll be well on your way to recognizing the patterns.
Fantastic. That was a lovely answer, and some great words of advice and words of wisdom. Now, one other question is unrelated to Bitcoin and finance, but I do know that you're very interested in CrossFit. I wanted to ask how your CrossFit is going.
Well, it's going fine. I mean, I'm 67, and you're very young, and so you could do it with zero problems, zero injuries. At my age, I have to be very careful not to hurt myself. Because sadly, the way the human body is constructed, I mean, I don't think we were meant to even live this long. I mean, if you look at the kind of the average age in the Middle Ages, it was, a lot younger than I am. So I love it. I find that fitness and health is a big part of keeping mentally sharp and keeping engaged. And so I try and do it whenever I can, as best I can. And I'm not particularly good at it, but I think what I might be good at is I'm consistent about it. And I would just suggest to everybody, particularly as you age and get to 50 plus, to start thinking seriously about your fitness, because I think it will determine. In your 50s, you can still solve problems. If you let them go too long, you get to the point where you can't solve them as easily. And I think how you treat your body in your 50s will determine how you feel in your 60s, 70s, and 80s. And the book that sent me on the path on this is called Younger Next Year, by a guy named Crowley. There were two authors. I can't remember the other's name, but one of them was Crowley. And it basically just kind of got me on the fitness path when I was, in my 40s and 50s, kind of fat and dumb and lazy. And I know it's made a big impact on how I feel. And, I'm prepared to, keep being very active for a long time. So, in your 20s, you got a lot of leeway, but it's never bad to start, getting good habits, and fitness is a really good habit. You want to eat well, you want to exercise as best you can. I think that you're likely, your health outcomes are likely to be a lot better. I mean, I will also say in my early to mid 30s, I quit drinking, and I found that was it's been an enormous advantage throughout my life and my career. And I highly recommend that to anybody who wants to go down that path. I mean, and I'm not against people who do drink. I have lots of friends who drink, and God bless them, and people can do whatever they want. But my observation was that, it's not good for you. So, I quit.
No, fantastic. That's interesting you actually bring that up, because whilst traveling through Europe, obviously you get tempted by the nightlife of different cities, but it's always in the back of my mind, and I always go through different stints of quitting drinking. And I think if I want to look back on my life and have extracted as much potential I could have out of it, I think drinking is a massive obstacle in the way of that. So yeah.
I'm not sure I would recommend it to 20s and 30-year-olds. I mean, I actually think probably in your 20s and 30s is probably a good time to drink. You ought to enjoy yourself.
Okay.
And, you know what I mean? I mean, it's like, get it out of your, seriously, get it out of your system, do whatever you want to do. You know what I mean? But, I've got some kids in the 20s, and I'm kind of like, over time, I think you really want to slow down, and eventually I think eventually you're going to get to where I am. Some people get to just being very light drinkers. That's fine too. But, I think you'll come to see, I mean, as your body develops and things change, I mean, what you can do in your 20s and recover from drinking wise, boy, that you'll even notice in your 30s, you can't do that. In your 40s, you really can't do that. So, so you're probably headed in the right direction if if you slowly taper it off.
Yeah, slowly tapering off is a good way to put it. And yeah, just to touch on your CrossFit journey, I follow you on Twitter, and I've seen you speak about it before. I've never done CrossFit myself. Like, I'm pretty consistent in the gym, but
Good.
CrossFit's a whole nother level. It's much more intense and there's a lot more cardio involved. So I think when I eventually go back to Australia, I'll be joining a CrossFit gym, and you've inspired me to do so.
You should give it a try. I mean, it's high intensity interval training is something they discovered that really makes a big difference. It hurts, but it's brief. You know, the workouts can be between 5 and 20 minutes. But you know, you trigger you get a hormonal response that you can't really get any other way, because what you're saying to your body is, I got to go 100%, and it hurts. You know, it's not easy, but it doesn't last that long. And your body gets the message, says, oh shit, we got to make him ready to do this. And man, everything changes. You know, you get leaner, you get stronger, you get more human growth hormone, you get more adrenaline. I mean, all of it. It's just, it really is kind of a fountain of youth. I mean, I was in my 50s when I started, and like I say, I was kind of fat, happy, and lazy. And boy, it was a shock to the system. But, you know, I mean, I feel like I'm kind of, you know, I'm in my late 60s now, and I feel like I'm kind of fighting weight. Do you know what I mean? I probably wasn't this fit when I was 40. So,
Wow.
yeah, so and I feel like I'm 40. I mean, even though I may not act like it, I feel young for what it's worth.
No, that's super impressive. Yeah, you've definitely inspired me. I'll definitely be giving it a go once I'm back in Australia. But Larry, thank you so much for being generous with your time. I really, really appreciate it. And this has been such a good
Thank you,
conversation.
Jim. I've enjoyed the conversation. You asked really smart questions, and I'm happy to do it anytime you like. You know, please keep me informed on your developments and where you're going, and hopefully I'll meet you at one of these shows. Are you coming to Nashville?
I don't think so. I think the first one I'll be going to is Bitcoin Prague next year. But if you're also at that, I'll
I'm
definitely.
thinking, I think next year I am going to do it. I was supposed to go this year and I couldn't do it. I had some conflicts, but I think next year I'm going to make a real effort to get there. So
Yeah, next year I'm going to make a
We'll be
real
there.
effort to go to a bunch of events. We have your Twitter link in the description where everyone can find you, but is there anywhere else that people can find you?
I do have a website, www.ema2.com, ema2.com, and I have quarterly macro letters that I write, and they're free on that website that you can read, just kind of talking about all this stuff, and you can subscribe and get them free. I won't spam you. You know, so and there's some videos on there, some of my other presentations and so forth. So people should feel free to do that. And as you're well aware, I make a ton of noise on Twitter. I'm pretty pissed off about what the investment banks and the Keynesian system has done to everybody. I'm pretty angry about how I've seen my country go downhill. I mean, you're young, you haven't seen it. I mean, America was a great place post World War II. I mean, it really was, and it still is a great place. But you know, when I compare the America of my youth to the America of today, I'm just heartbroken. I mean, it's sad, you know, what's happened. And frankly, I think fiat money is the cause of that. I mean, going off the gold standard in 71 was an enormous crime. And you know, and returning this country to sound money will be an enormous positive. And I think Bitcoin is the thing that's going to do that. So so there's a lot of hope, but we got to get through this transition. Right.
Fantastic.
Right.
I couldn't have ended it any better than that. So perfect. And yeah, you're
Yeah.
well worth a follow. You're one of my favorite accounts to follow on Twitter, and I'll leave your website in the description below for everyone to find it.
That's
Cool.
great.
Let's end it there. Thank you so much, Larry.